Tonight the bell rings, and you know what? The sell-off kind of picked up right after lunch. You see the Dow there down a little bit. Nothing to get all fussed about, and they're certainly not concerned about politics. It's Wednesday, August 22nd. Wall Street saying, crisis? What crisis? It shrugs off Cohen, Manafort, and all the DC chaos. This bull has stamina saying it's all bull. Wall Street hits its longest winning streak in history. The CEO of Box tells me why he thinks we will all be spending less time in the grocery store. Hallelujah to that. I'm Paula Newton, and this is Quest Means Business. Okay, tonight the Trump presidency is in crisis. On Wall Street, though, the bulls continue to run over everybody. Donald Trump is fighting back and speaking out a day after his former attorney and longtime fixer, so-called, Michael Cohen, directly implicated him in crimes. Now, here in New York, as you can see, look, there was a bit of a sell-off, 1/3%, really nothing at all. We're calling this a shrug. The Dow is only a touch lower. The S&P is flat. The NASDAQ even made small gains. Now, it comes in an historic day for markets. This bull run is now, in case you were wondering, the longest in United States financial history. Back in Washington, though, the president says Michael Cohen pled guilty to crimes that just aren't crimes. He told Fox News that any payments made to women covering up their alleged affairs with him were not taken from campaign funds.
Did you know about the payments?
Later on, I knew. Later on. But you have to understand, Ainsley, what he did, and they weren't taken out of campaign finance. That's a big thing. That's a much bigger thing. Did they come out of the campaign? They didn't come out of the campaign. They came from me, and I tweeted about it. You know, I don't know if you know, but I tweeted about the payments. But they didn't come out of campaign.
Catherine Rampol is here. She is a CNN political and economic commentator and an opinion columnist for The Washington Post. I mean, I just want to set the whole stage here. In terms of markets and in terms of the economy, they're looking at what's going on with Donald Trump and just basically wagering this isn't going to change the economic fundamentals one bit because they don't believe he can be indicted and they do not believe he will be impeached.
Well, I think the bigger risk to markets going forward has to do with tariffs, right? Has to do with things that this presidency would pursue that actually affect economic fundamentals or that could mess with markets. So in terms of impeachment, yes, maybe that could present some risk to investors, to markets. But the real thing that investors are paying attention to is what's happening to the bottom line of the companies that they're investing in.
You know, it's interesting, Catherine, because even today, as we had the Fed minutes were released at 2 o'clock, they really discussed the risk of a deepening trade war. I think some people, though, looking at this, you can't ignore the political situation. And the reason is that you do not know when this president will decide to escalate trade tensions, despite a lot of the chaos that's going on in both his political and personal life.
Yeah, it's bizarre, actually, I think, that markets have managed to shrug off the threats of this escalating trade war.
And believe me, Catherine, I was down there today. They've got their head in their sand. They're like, nope, you're talking to the hand. We don't care about this.
And I don't exactly know how to explain that. I think it could possibly be that markets are assuming, you know what, Trump is all bluster, this will go away, even though we have levied at this point lots and lots of tariffs, and we have been subject to retaliatory tariffs by many of our major trading partners. Let's hope that Trump, you know, sees the light and all of this stuff will go away. And of course, we have had some low-level talks between the United States and China resuming. Supposedly, there's going to be some kind of announcement about the U.S. and Mexico making the beginnings of a deal. We don't know exactly what's going to come, but it could possibly be that markets are just sort of assuming that all of that stuff is going to blow over. And of course, remember, we had a major tax cut. We've had a major federal spending increase. That, of course, juices the economy, and that is going to raise the valuations of stocks as well. I mean, stocks are a claim on the after-tax profits of firms. And if you are cutting their taxes, by definition, you are increasing the after-tax value of those stocks. So there are a lot of things that investors seem to be happy about. I mean, if you look at the long-term price-to-earnings ratio, you know, that Robert Shiller at Yale keeps, stocks potentially look a little overvalued at this point, right? Like they're at basically their highest level more or less since the dot-com bubble. So who knows how much longer this will continue. It could continue for a while. There were lots of people who called the mortgage crisis well before it actually happened, and they lost their shirts. So I don't mean to suggest that there's like a crash around the corner, but it does seem like there's some momentum coming here from the tax cuts, from the fact that we still have very low interest rates, and that means that maybe there aren't that many places for investors to stick their money, whether in bonds or in emerging markets or developing markets at this point. So it's a little hard to say, you know, animal spirits, you never know. But so far, people are shrugging off a lot of the risks that are out there.
And before I let you go, I do want to talk about Donald Trump saying that he doesn't appreciate that the Fed is not helping him out on interest rates. He'd like to keep interest rates low. His motivations in that are quite clear. You have argued in saying, look, this is not good that a president wants to interfere or believes he can interfere with the Fed's independence. We had the minutes that came out today. Besides the trade, they're holding the line likely on 2 interest rate rises this year, penciled in 3 next year. You know, your points are so on the money because you're basically saying that, look, these Fed nominees, which there are still 4 vacancies, you know, one of them said in May, look, the president talks to us about if we are dovish or hawkish about interest rates. He described it as top of mind, you said.
Yeah, this is Kevin Warsh, who actually was being interviewed for the top job, for the Fed chairman job, and did not get the job. We don't exactly know what he told the president about his views on interest rates and whether he was going to hike rates. But look, it is incredibly important that the Federal Reserve is shielded from any sort of political influence. We know that politicians, basically from the beginning of time, have had a temptation to cut interest rates and pump money into the economy to juice the economy in the near term. But the trade-off of that, while it might be good when an election is coming up, is that you get inflation. And if markets fear that there is any sort of political influence over the Fed, that the Fed is not independent, you can get runaway inflation even just from the expectation of that. We've seen that happen in Argentina and in Venezuela and lots of other countries. So I think it is critical that Trump and the White House stop jawboning the Fed.
Yeah, and Jay Powell so far showing no signs that he was listening to the president at all. We will continue to follow this. Again, markets don't seem to be rattled by that at all. Cancer, thanks so much. Appreciate you coming in. Now, it has taken 9 years, 5 months, 2 weeks, and yes, 1 day. And now this bull market is the longest period of uninterrupted gains in American history. Now, with a slow but steady economic recovery and unprecedented aid, as Catherine was just saying, from the Fed, the Dow has catapulted from around 6,500 to nearly 26,000. The S&P 500 has quadrupled, and newer players like Netflix and Amazon have helped. Oh yeah, have they helped that NASDAQ skyrocket. We've come a long way, baby, since this bull market started. Claire Sebastian takes us all the way back to the beginning.
It was Monday, March 9th, 2009.
How do you feel?
Bernie Madoff was under house arrest for the greatest Ponzi scheme in history. Famed investor Warren Buffett issued a dire warning on the state of the economy.
We talked about it being an economic Pearl Harbor. It's fallen off a cliff.
And Larry Kudlow, then a TV pundit, railed against efforts to rescue world economies.
They're doing the wrong kind of stimulus. They are spending their tuchuses off.
On Wall Street, still reeling from the collapse of 2008, it was just another down day. The Dow falling over 1% to 12-year lows. Most people unaware this was as low as it would go. The bottom of one of the worst bear markets in history. On March 10th, stocks rallied, the Dow soaring almost 6%. Soon, there was talk of economic rebirth.
Do you see green shoots?
I do see green shoots.
And by the end of the year, the Dow was back above 10,000 again. Over the years, the bull run would be tested in August 2011 by the U.S. credit rating downgrade.
The political brinkmanship we saw over raising the debt ceiling was something that was really beyond our expectations.
In early 2016, by plummeting oil prices and a slowing Chinese economy.
What's going on in the yuan, the Chinese currency, that sharp devaluation is very bad.
And just this February, as markets spun lower over fears of the end of cheap money.
Worries over rising interest rates, concerns about higher inflation.
Be it a cyclical downturn that stops the record run.
The risk of recession rapidly rises as we look out to the second half of 2019 and into 2020.
Or something unexpected. One thing is clear. March 9th, 2009 was the buying opportunity of a lifetime. Claire Sebastian, CNN Money, New York.
And so many of us missed it. Now, earlier on the floor of the New York Stock Exchange, I spoke with a man who spent decades in the boom and bust of Wall Street, only booms lately. Ted Weisberg is president of Seaport Securities, and he told me why, get this, they say this on the trading floor. You hear it. It's the most unloved bull market in history.
It's Fed monetary policy that's going to have the biggest influence next to corporate profits.
Politics won't bother this market, you know?
Well, I mean, I think the answer to that is no. I mean, just politics are politics, but we always have politics.
But what if it derails the Trump agenda? If we do start to talk impeachment, or it just, all the deregulation the market loves, all the tax cuts that the market loves?
To me, it's just all chatter. And it's background noise. It's perhaps worth listening to, but at the end of the day, it's still background noise. And by the way, I would question the longest bull market in history, because in fact, if you go back to 1980 when Reagan was elected, and the Dow was 1,000, having taken 12 years to get through Dow 1,000, 12 years.
Think about that.
All right. In 1982, the market got through 1,000, and then it ran 10 times from Dow 1,000 to Dow 10,000 in the year 2000, including the crash of '87, down 22% in one day. The market went up 10 times. That's 18 years. So I would say, you know, this has been fits and starts, and I guess with the benefit of hindsight, it's been a heck of a run, but we've had other big runs besides this run.
You literally have 5 seconds. Why do people call this the most unloved bull market ever?
Oh, because the background noise is so toxic. But at the end of the day, it's Fed monetary policy and terrific corporate earnings, and the rest of it is simply noise.
Simply noise, and even Ted says it's toxic. We go now to the White House and Abby Phillip. You know, Abby Phillip, we saw Sarah Sanders today during that briefing try and answer a lot of those political questions. Again, the same thing from the White House, saying there are no contradictions in what the president is saying.
That's right. It seems very much that Sarah Sanders came out to the press podium to answer some of these questions after really a bombshell day for this White House yesterday. 2 of the president's former aides found guilty of federal crimes, felonies, and the White House today had not a whole lot to say. She repeated the talking point that President Trump has not been charged with a crime, that he did nothing wrong, and that there was no collusion. But she was also asked about why President Trump continues to insist that he didn't know about the payments to 2 women who claimed to have an affair with him, made by his personal attorney, which led to some of these charges against Michael Cohen. He claimed today that he didn't know about them before those payments were made, even though we know that there is an audio tape of the president discussing those payments with Cohen before they were made. Listen to how she responds to some questioning by CNN's Caitlin Collins.
In his interview today, the president said he found out about those payments that Michael Cohen made later on. But he's on tape discussing how to make one of the payments with Michael Cohen, so before the payment was made. So how do you explain that?
Once again, I've commented on this pretty extensively. What I can tell you about this is that the president did nothing wrong. There are no charges against him. There is no collusion. For anything beyond that, I would refer you to the president's outside counsel.
Rudy Giuliani is not a taxpayer-funded spokesperson for the president. You are. So how can you not explain something the president said today on the grounds of the White House that seems to contradict an audio that has been confirmed that it is of the president saying that?
Once again, I have addressed this a number of times. Just because you continue to ask the same questions over and over, I'm not going to give you a different answer. The president has done nothing wrong. There are no charges against him. There is no collusion. That's what I can tell you about this. If you want something further, I would refer you to the president's outside counsel.
Does the White House maintain
sorry, I called on Francesca. I'll
Does
come
the White
back
House
to you, Julie.
maintain the president did not have affairs with Karen McDougal or Stephanie Clifford?
We've addressed this a number of times.
So lots of no answers there from Sarah Sanders, but sources are telling CNN that the White House's strategy and the president's strategy is going to be to try to discredit Michael Cohen. This case could be one of those cases that really folds in some big issues for the president, both on his business side and also on the personal side as well. Meanwhile, we have also learned that President Trump was surprised to find that Michael Cohen claimed in his plea deal with federal prosecutors that the president directed him to make those payments, which were in violation of federal law. It remains to be seen how they will deal with this and what more Michael Cohen has offered to prosecutors that allowed them to offer him a plea deal.
Yeah, and as you continue to hear from the president, Abby, just want to let you know, if you haven't seen it already, that the president just tweeted on the bull market we were talking about. He said, longest bull run in the history of the stock market. Congratulations, America. I would say he showed quite a bit of humility in that tweet compared to what we're used to. But Abby, do you believe that this is part of the strategy now? If he continues to concentrate on the great economy, on deregulation, tax reform, trade deals that he may still get in the coming weeks, that those around him believe he can survive this political crisis?
Well, it is not clear whether the White House believes that the economy is going to be enough. In fact, it seems very much that they don't believe that it's going to be enough. The president does plan on spending a lot of his time on the campaign trail in the next 2 months. The White House announced last night he's planning 40 stops between now and November. But the big issue for President Trump, even though the tax cuts are something that he would like to talk about, the big issue has actually been immigration. I think there are a lot of worries, both here at the White House and among Republicans in general, that even this booming economy, even those tax cuts won't be enough to get Republican voters in particular out to the votes in November.
Yeah, and he is certainly worried. He wants the Republicans to keep control of that House for many reasons now, Abby. Thanks so much. Appreciate the update from the White House. Now, social media firms are scrambling to protect their platforms ahead of the U.S. midterms. Facebook and Twitter are the latest companies to take action. We'll tell you who they're accusing of spreading false information next.